Now, to discuss these BP results and the wider situation in the oil markets, I'm joined by Cornelia Meyer. She's an energy expert. She's also the CEO of the commodities business MRL Corporation, and she's in our London studio. Good to see you as always, Cornelia. BP, how much worse is this than people like you were expecting?
Well, we expected it actually only be marginally better, So we expected it to be bad because on the 2nd of July, there was this $18.7 billion that they settled with the states, the federal government and the local governments in the Gulf of Mexico. So we knew that there would be a charge of about 10 billion, and that would drag the result down.
One good thing, though, is that this means that it's almost finished, isn't it?
It means it is finished for the government side, but there are still civil claims. And the good thing is that this will be guidance for, the law courts in terms of what they can do with civil claims. So, yes, I would say we see the light at the end of the tunnel.
If we take a look at how all of these big oil majors have been responding to the low prices, they have actually been cutting quite significantly apace, whether it's Shell, whether it's BP. Do you think they're cutting fast enough, or do you think they're not cutting fast enough? Because the one thing that I do notice is they've maintained their dividend, just as companies like Shell have, to keep investors interested in their stock.
Absolutely. If they on the back of this news, if they cut dividend, the share price would plummet. So Bob Dudley had no other choice but to keep dividend. What I find worrisome is, and what BP hasn't done quite to the extent I thought they would do, they've only been down about 13%, is cutting down CapEx, capital expenditure, which is, future growth. Which is future production. And if I look at it in the first 3 quarters, the big oil companies, the international oil companies, have cut down about $250 billion. And now they have cut another they're expected to cut another $200 billion. And mind you, in 3 to 5 years, that will be production that's not coming on stream.
So you're seeing a bottleneck further down the line in about 5 years from now, based on those kind of reports that we saw this time yesterday, in fact, saying that $200 billion worth of projects had been curtailed. Exploration will become the next bottleneck. But then the flip side is that we could have Iranian petroleum hitting the market soon, and that could be an extra, 1 million barrels a day.
Well, you see, I'm not as bullish on that. Yes, they have about 40 million barrels on floating storage, which is easily released, and they'll probably release it by 500,000 barrels a day. But that lasts you 2.5 months. After that, to up production 1 million barrels, that is, currently they're producing about 3.6 million barrels. So that's more than 25% up. And if I have a comparator of Saudi Arabia, which is an incredibly well-run oil company, a well-invested oil sector, it took them a long time to get their spare capacity up it by 1 million barrels a day, 1 million barrels. So it will take Iran quite some time to get the production up to 1 million barrels.
Yeah, and as we see all these Western oil companies queuing up to try and shake Hassan Rouhani's hand, now that potentially sanctions are off the table and they can start doing business there, again, we have these mixed messages of investment, of whether the big BPs and Shells, Totals, you name it, Exxons, will actually really want to plough the money that they need to into a country like Iran.
Exactly. And I think the Iranians will play it very smart. They will first give something to the people who have been on their side, the Chinese. They will give money. They will probably give projects also to Total, who has always been on their side. And then they will strategically give projects sort of on the P5+1, the governments that were that helped, lift the sanctions, so that they have broader buy-in from a geopolitical sense.
Cornelia Meyer, always good to see you. Thank you very much for coming on the show there. Cornelia Meyer there, who is not just an energy expert, but she's also the CEO of the commodities business, MRL Corporation.